what type of transactions we have to record in the books of account. So we cannot record all the transactions. There is a particular unit to measure the transactions, that is in terms of money. So we will record the transaction only which can be measured in terms of money. Remember, trading profit and loss account is an account where we are going to prepare continuously. Half will be trading account. So after preparing trading account, we'll come to know the gross profit or gross loss. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are going to begin the first unit of your NEP syllabus, that is for first sem B.B.A, and the subject name is Fundamentals of Business Accounting, and the unit 1 is Introduction to Financial Accounting. So in this particular unit, you are going to learn all the theory aspects about financial accounting. So let us quickly begin the session. Now, we shall have a brief introduction about financial accounting. So if you see the history of accounting, it is as old as human civilization. In the sense, in the earlier days, so that is in the earlier decades, so they used to have a small clay objects which is having certain symbols or some letters, so which identifies the number of products or the number of items which was there with them. In the sense, instead of bookkeeping, so like nowadays they don't have a books of accounts where they maintain the accounting system. So they used to have a small clay objects which identifies their accounting system. So here we can tell that this accounting is as old as human civilization. The first book in double entry system. So whatever the system what we are following now, so it is known as what? Double entry system. So the first book on double entry system of bookkeeping is a book on mathematics called the name Summa, written by Luca Pacioli. Now this is the first book which is written on double entry system of bookkeeping. So as I told you, this accounting system has a lot of history where they used to have a clay objects in order to identify the number of items or number of goods which was with them. So after that, after this modernization, so the system of bookkeeping has been introduced. Later on, number of concepts, number of principles on accounting got introduced. So here, step-by-step process was taken place in the accounting. And the first book on double entry system of bookkeeping was written by a mathematician named Luca Pacioli, and he is popularly known as father of accounting. So this you have to remember. Now who is the father of accounting? Luca Pacioli is popularly known as father of accounting because he is the first person who have written a book on double entry system what we are following today. So he is popularly known as father of accounting. So this is about a brief introduction about financial accounting. Now let us see the definition of accounting. So we have to know what is this accounting. Okay, so normally accounting begins with identification of transactions. That is, what type of transactions we have to record in the books of account. So we cannot record all the transactions. So there are a number of transactions that takes place in a business, but we cannot record all those transactions. So we have to identify what type of transactions we have to record. So here there is a popular definition on accounting, that is according to American Institute of Certified Public Accountant. So this is an institute which have defined accounting as accounting is an art. So it is an art because it is a art. Why? Because it is a process of recording, classifying, summarizing, identifying. So it is a process. So it is a art of recording. So as I told you, so we will record those transactions. So we will record all those financial transactions. So recording, classifying and summarizing. Now, if you think about recording, so what type of transactions we have to record? So, as I told you, there are a number of transactions which takes place daily in an organization, but we cannot record all those transactions. We will record only those transactions which can be measured in terms of money. That is, which can be measured in terms of monetary units, only those transactions can be recorded. So it is the art of recording. So after recording, what we will do? We will classify the transaction. So this recording of transaction takes place in a book which is called as what? Journal. So journal is called as book of original entry. In the sense, whenever the transactions takes place or whenever the events takes place in the business which can be measured in terms of money, immediately we will record in a book in a chronological order. That is, one by one we will record in a book which is called as what? Journal. So journal is called as book of original entry. So after recording in journal, so what we'll do? We will classify the transactions, because in journal we will randomly record all those transactions in a chronological order. After that, we have to classify the transaction. Depending upon their nature and type, we have to classify the transaction, which is the next process, that is classifying, where classification takes place in the form of ledger accounts. So after classifying, summarizing. Now what we have to do? So we cannot directly communicate the accounting information to the users. We have to present in such a way that the user can understand those accounting information very easily. So we have to present in a understandable manner. That is summarizing in a significant manner. So as I told you, we have to present that accounting information in an understandable manner and in terms of money. So as I told you, we will record only those transactions which can be measured in terms of money, that is monetary units. So money, transactions and events. So what type of events will record? Only monetary transactions. Transactions which can be measured in terms of money, which are in part at least of a financial character. So it should be measured in terms of money, or it should be in a financial character, and interpreting the results thereof. So how do you interpret the results? So we are going to present the accounting information in the form of profit and loss account as well as balance sheet. So in summarizing, we will make ready. So how we have to present? In interpreting, we actually present the accounting information in the form of profit and loss account as well as balance sheet, where the user will come to know the net profit or net loss of the business and financial position of the business. That is interpreting the results. Results is nothing but the financial results of the organization. So this small definition has a lot of meaning here, and this is a very important definition which is given by American Institute of Certified Public Accountants. So you have to know this definition. Now let us go through the characteristics of accounting. So already we have learnt about the definition of accounting, where I have clearly told you what accounting means, correct? So after knowing the definition, so it is very easy to understand the characteristics. So let us see the characteristics one by one here. So the first one is accounting is an art as well as science. So in our definition, we have learned that accounting is an art of recording, classifying and summarizing. Now accounting is an art. So let us see why it is considered as an art and why it is considered as a science. So accounting is an art of recording, classifying and summarizing business transactions with a view to ascertain the net profit or net loss of the organization, or even the financial position of the business. So, as I told you, accounting starts with identifying of the transactions, where we are going to identify only those transactions which can be measured in terms of money. So, there are a number of transactions which affects the business. For example, the resignation of an efficient employee. Of course, it affects the profitability of the business, but we cannot record such type of transactions because it is not measured in monetary units, or it cannot be measured in terms of money. So we are not going to record those transactions. So accounting is an art. So why it is called as an art? Because it is the art of recording. So we are going to record each and every transactions in the books of account. So after recording, we will classify the transaction. So recording takes place in the journal and classification takes place in ledger accounts. That is, we are going to segregate each and every type of accounts into a particular account. So that is classifying and summarizing. So we will present that information. So we will make it ready to present the information. That is summarizing business transaction with a view to ascertain the net profit and financial position of the business enterprise. So why it is called as an art? Because we are going to record, we are going to classify and summarize and present in the form of balance sheet as well as trading profit and loss account. Thereby we will come to know the net profit or net loss of the business and financial position of the business. Now let us see why it is called as a science. So accountancy is also a science because it contains number of accounting principles, accounting concepts, which we call it as body of knowledge. So accounting is, or accountancy is, a body of knowledge which contains all the theoretical aspects. It's not just that we are recording the transactions randomly. So we have to follow certain principles, certain concepts, certain conventions, certain assumptions are there. So that all theoretical aspects is called as what? So it is called as, or accounting is called as a science because it contains all the theoretical aspects. So accountancy is also science since it is also an organized body of knowledge. So it contains all the theoretical aspects relating to recording, classifying, summarizing. So whatever the activity which are going to conduct in accounting, so all the theoretical aspects will be included in accounting. So we will call it as a science because it is a body of knowledge based on certain specified principles and accounting standards. So you will come to know which are the accounting principles, accounting concepts, accounting conventions later on in this particular unit. Now you remember that accounting is both an art as well as a science. And the second one is recording of financial transactions only. So I have already told you in the definition itself, we will record only those transactions which are financial in nature. So as I given the best example of resignation of an efficient employee, of course it will affect the profitability of the business. Suppose an efficient employee has resignated from the organization. So nobody can replace him because as I have already told you, he is an efficient employee. Now, even though it affects the profitability of the business, but we cannot record such type of transaction in the books of account because it cannot be measured in terms of money. So only those transactions and events are recorded in accounting which are of financial character. So we will record only those transactions which are of financial character. There are so many transactions in the business which are very important for the business but cannot be measured and expressed in terms of money. So such type of transactions are totally ignored. We are not going to record such type of transactions which cannot be measured in terms of money. So this is a second characteristics. Now coming to the third one, recording in terms of money. So there is a particular unit to measure the transactions, that is in terms of money. So we will record the transaction only which can be measured in terms of money. That is, each transaction is recorded in the books of account in terms of money only. So this is a third characteristics. Now coming to the fourth one, let us see what is this classifying. So we have learnt about recording. So what type of transactions we have to record. So after recording, we have to classify the transactions. So based on their nature, based on their use, so we are going to classify the accounts. So let us see what is this classifying. So after recording the transactions in journal or in the subsidiary book, which takes place in the stage of recording. Okay, so these journal as well as subsidiary books comes in the stage of recording of transactions. So after recording of transactions in journal or in subsidiary books, the transactions are classified. So we have to classify the transactions depending upon their nature. So classification is a process of grouping the transactions of one nature at one place in a separate account. So what we are going to do, in journal we will get all the transactions. So in journal, that is in the recording stage, it will have all the transactions which can be measured in terms of money and which are arranged in the chronological order. Now in the classification stage, depending upon their nature, that is, for example, all the transactions relating to purchase will be recorded in one account, that is purchase account. In the same way, all the transactions relating to sales, that is in sales account. All the transactions relating to cash, that is cash account. All the transactions relating to machine, so that is machinery account. So like this, depending upon their nature, we are going to segregate all the transactions into one particular place at one particular time. That is known as what? Classification. So where we are going to prepare separate account. So the book in which various accounts are opened is called as what? Ledger. So these individual accounts, what we are going to prepare, so those are called as what? Ledger. So separate accounts are opened in the ledger in the name of each person, where customer or supplier. So what we are going to do, as I have already told you, we are going to classify the accounts depending upon their nature. So here what happens, we are going to prepare separate accounts individually. Likewise, separate accounts are opened for purchase, sales, asset, etc. Similarly, all the expenses, all the incomes, all the losses, all the gains will be separately. So we are going to classify it separately in the stage of classifying, where we are going to prepare the ledger accounts. So hope you are clear about the classifying. So what you have to remember, so all the transactions which we have already recorded in the journal, so we have to segregate them into individual accounts. Depending upon their nature, we are going to segregate them into individual accounts, which is called as ledger accounts. Now coming to the fifth one, summarizing. Now, this is also one of the important characteristics of accounting here. So, what is this summarizing? It's not just that we have recorded the transaction, we have classified the transaction, but we have to present the transaction in such a way that it can be understandable to the users. Now, this is a stage where we are going to summarize the transaction. In the sense, unnecessary transactions have to be deleted, or if any additions that has to be made, so that has to be made in this stage of summarizing. So, summarizing is the art of presenting the classified data in a manner which is understandable and useful to the management and other users of such data. So, what do you mean by that? It is a process of presenting the accounting information, presenting the classified accounting information to the users, that is the ultimate users. So here it is very important, as I told you, whatever the transactions we have recorded, directly we cannot present into the users, because users have to understand what the actual result of the organization. So it has to be presented in such a way that it has to be understood by the users. So this involves the balancing of ledger accounts and preparation of the trial balance with the help of such balance. So how we can make, or how we can conduct summarizing? So we have to take all the balance of ledger accounts and prepare a trial balance. Now what do you mean by trial balance? So it is a statement which tells us about the accuracy of ledger accounts, whether our ledger account is correct or not. So in order to measure that, we are going to prepare a statement which is called as what? Trial balance. So the accounts are prepared with the help of trial balance, which include trading and profit and loss account and balance sheet. So by using trial balance, we are going to prepare trading account and profit and loss account and then balance sheet at the end of the financial year. So trading account is prepared for calculating the gross profit or gross loss. So this will come to know. So that is in the final accounts of a sole trading concern where we are going to prepare this trading account where we'll come to know the gross profit or gross loss of the business and profit and loss account. So profit and loss account is prepared to ascertain the net profit or net loss during the year. So in order to ascertain the net profit or net loss, we will prepare profit and loss account. Now what is this financial statement of an organization? So it contains trading and profit and loss account. And the next statement what we are going to prepare is balance sheet. So here you have to remember trading profit and loss account is an account. Okay, so it is a single account where half will be trading account, which will come to know where after preparing trading account will come to know the gross profit or gross loss. Then the continuation will be profit and loss account where we will come to know the net profit or net loss of the business. And later on we'll prepare the balance sheet. So balance sheet is prepared in order to know the financial position of the business. That is the total assets and total liabilities. So that is balance sheet. So remember, trading profit and loss account is an account where we are going to prepare continuously. Half will be trading account. So after preparing trading account, we'll come to know the gross profit or gross loss. And the continuation of that will be profit and loss account where we'll come to know the net profit or net loss of an organization. Next, we will prepare the balance sheet. So balance sheet is not an account, it is a statement. So where it contains the assets as well as liabilities, thereby we'll come to know the financial position of the business. So balance sheet is prepared to present the financial position of the business. So this I have already told you. So we are going to prepare the balance sheet in order to know the financial position of the business. Next one is interpretation of the results. So after summarizing, that is after presenting the accounting information in an understandable manner, we have to interpret the results. Now let us see what is this interpretation of accounting results. In accounting, the results of the business are presented in such a manner, that is by preparing trading and profit and loss account, that the parties interested in the business such as proprietors, managers, bank, creditors, employees, CEO of the organization can have a full information about the profitability as well as the financial position of the business. Now, in summarizing, we will just make it ready or we will present in an understandable manner. But we have to communicate that information to the users in the form of what? In the form of trading profit and loss account. So by trading profit and loss account, the user will directly come to know what is the net profit or net loss of the business and financial position of the business. That is, we are going to present in the form of trading profit and loss account as well as balance sheet. Whereas in summarizing, it is an earlier stage where we are going to just summarize. So we will delete all the unnecessary items or unnecessary transactions and we are going to keep it only the important information. And in order to check that information, we will prepare the trial balance. So till that it was summarizing. So interpretation means what? Presentation of accounting information in the form of trading profit and loss account as well as balance sheet. Now coming to the last stage, that is communicating. So we have presented the accounting information in the form of trading profit and loss account. Now we have to communicate the information to the respected users. So it may be internal users or external users of accounting information. So that you are going to learn later who are the internal users and who are the external users. Now users means what? Who are dependent on accounting information. It may be inside the organization who is called as internal users, and those who are outside the organization and still dependent on accounting information, they are called as external users. So it is the duty of the organization to communicate the accounting information to these users. It may be internal or external. Now, communicating of accounting information means what? Accounting attribute also include the communication of financial data to the users who analyze them as per individual requirement. For example, the shareholders. So we call it as shareholders are the real owners of the business. Now, if you want to communicate the information to the shareholders, so by knowing the accounting information, shareholders will come to know what is the exact financial position of the business, and thereby he will decide whether he has to invest or he has to take back his investment. Correct? So, in order to make the investment decisions, so for the shareholders, this accounting information is very helpful. In the same way, financial institutions who have provided loan for the organization, so they also wanted to know the financial position because they want to know whether the organization is in a position to recover the loan or not. So, for that reason, so it depends upon the individual requirement where the user is dependent on accounting information. So, this is also one of the important characteristics of accounting, where after interpreting the accounting information in the form of trading profit and loss account as well as in the form of balance sheet, so it has to be communicated to the respective users. Now let us see what are the objectives of accounting. So till now we have learnt everything relating to characteristics of accounting. Now let us see what are the objectives of accounting. The following are the main objectives or utility of accounting. So the first one is to keep systematic record of business transactions. Of course, we cannot remember each and every transactions. So, whatever the transaction which has happened 2 months back, so we can't remember that and we can't recall that. So, for that reason, what we'll do, we will record all that transaction in a books of account. So, what is the main objectives of accounting? To keep systematic record of business transaction. For the easy reference, we have to make systematic record of books of accounts where we will record all the transactions in a chronological order as per the date. And the second one is to calculate the profit or loss. Of course, the main intention of accounting is to know the profit or loss of an organization. So, without accounting, it is very difficult for an organization to ascertain the profit or loss of the business. So, as I told you, there are a number of users who are dependent on accounting information. So, they have to know the accounting results. That is, they have to know the profit or loss of the business. And the next objective is that to know the exact reason leading to the net profit or net loss. So, what leads to net profit or net loss? So, by preparing this accounting, so we will come to know what is a reason for net profit or net loss in that particular year. So, it may be increase in sales or increase in demand for a particular product. So, what would be the reason? So, in order to know the reason, we have to prepare this. And the next one is to ascertain the financial position of the business. Of course, by preparing the balance sheet, we'll come to know the financial position of the business. That is, what is the position of assets and what is the position of liabilities of an organization. And the next one is to ascertain the progress of the business from year to year. Yes, of course, the comparison of accounting results. So, the comparison of organization's result will come to know from year to year. For example, in 2016, so there was a profit of rupees 1 lakh. So, if we take 2016, there was a profit of rupees 1 lakh, and 2017 it was 5 lakh, and 2018 it was 4 lakh. So, here we can make the comparison, correct? So, in 2016 it was just 1 lakh, whereas in 2017 it was 5 lakh. So, it has increased by 4 lakh. Later on in 2018 it was 4 lakh, in the sense decreased by 1 lakh from that of previous year. So, such comparisons can be always made through this accounting system, where they are going to ascertain the net profit or net loss of the business. And the next one is to prevent and detect errors as well as frauds. So suppose there is no proper accounting in the business organization. So we cannot come to know where our cash has been invested. So where our cash has been, or where we have spent lot of money in the organization. So such thing we cannot come to know. Thereby there may be chances of more frauds as well as errors. So in order to prevent that, a proper accounting system has to be maintained. And the last one is to provide information to various parties. It's nothing but the various users of accounting information. They may be internal users or external users who are completely dependent on accounting information. So I had given the best example of shareholders, financial institutions. In the same way, there are a number of customers who wants to know about the financial position of the business. So these are the few objectives of accounting. So the last objective was to prevent information or to provide information to various parties like internal users or external users. So these are the objectives of accounting. So my dear students, in my next session, I am going to discuss about the next topic, that is scope of accounting, and the next one is functions of accounting. Let us see what is the scope of accounting. So how accounting plays a very important role in the business organization and what are the functions of accounting. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.